What's going on, you guys? Welcome back to the channel. So in this video today, we're going to be going through step by step some of the most important criteria to consider when picking out an ETF or exchange traded fund. So real quick, guys, before we jump into the presentation here, I do have a few quick disclaimers. First of all, I am not a financial advisor, and this is not any kind of financial advice, and you should always do your own due diligence above and beyond this video before making any, decisions about investing. Also, this video is sponsored by SoFi, but more on that later. Also, guys, I've had this pretty big problem lately with spam and scam comments on my channel, so I do have my VA taking care of that, and right now he is manually approving all of the comments, but just be careful in the comments. Watch out for any scams down below. I'll always do my best to answer your questions, but make sure you look for that white check mark next to my name to make sure that it is actually me. So that being said, guys, let's start off by talking about what exactly is an ETF. So an ETF, or exchange traded fund, is basically a group of assets, typically stocks, that are bought and sold on a major exchange. So here in the US, the main two that are used are the New York Stock Exchange and the NASDAQ. And you're going to find a wide variety of ETFs out there on both exchanges. So basically, ETFs track an underlying asset, commodity, sector, or other group of securities, and an ETF can own a handful of stocks or could own thousands of stocks in a variety of sectors or industries. So basically, ETFs can be a useful tool if you are looking to, get exposure to a certain sector or industry or area of the economy, basically without picking individual stocks. So regardless of any industry out there, you're always going to have winners and losers. And people who invest in ETFs are typically those who say, hey, I don't want to be bothered with the research of individual stocks. I want to have broad market exposure at a low cost, or I want to have exposure to a particular area of the economy that I feel will do well, but I'm not going to, trouble myself with trying to figure out of those companies who's going to be the biggest winner. Now, ETFs can be purchased on various brokerages such as SoFi. Currently, they have over 2,000 ETFs listed on US exchanges with over 5.8 trillion in assets managed as of July 18th, 2021. So now we're going to break down a couple of different types of ETFs that you will see available on the market. First of all, bond ETFs. You're going to find different types of bonds here. You'll find government bonds or treasuries. You'll also find corporate bonds, which is debt for companies out there. And you'll also find state or municipal bonds as well. Those are the three types of bond ETFs that you will typically find. You'll also find industry or sector specific ETFs that will track and follow, certain industries, as we were saying, where you have basically ownership of many companies that will benefit from that industry. There's also commodity ETFs that will track things such as gold, crude oil, etc. You can also find currency ETFs if you want to invest in foreign currencies. And you can also find inverse ETFs that track the inverse of an underlying asset. So why do people choose ETFs? First of all, the main reason is strong diversification with one buy, because just like this basket full of eggs here, you have many different stocks and companies within that basket. Also, there's typically less fees than index funds if you're looking to buy an ETF. And also, if you're looking at mutual funds, you'll typically find an ETF is a lot less expensive than a mutual fund in terms of the expense ratio. Often, there is also a better tax scenario when compared to index funds, because when selling an ETF, it is done like a stock, but with an index fund, the manager must sell a position and then return funds to you. So that's another advantage you have there with a ETF over an index fund. Now, other than the underlying assets within an ETF, arguably the next most important thing to consider is the expense ratio. So ETFs all have an expense ratio associated with them, and depending on the brokerage that you use, you could also incur commission fees when buying and selling. Expense ratios for an ETF are typically less than 1%. They can be even sometimes less than 0.1%, depending on which ones you are looking at, and expense ratios are typically deducted annually. Now, you do want to pay attention to this here because any expense ratio that you are paying is going to come out of your total return from that investment. So 1% versus 0.5% versus 0.1 may not sound like a lot of money, but you have to consider the compounded effect of that fee if you are investing for the long term. So beyond that here, guys, let's suppose that you have an expense ratio of 0.5% and an initial investment of $1,000. Your yearly deduction would be 1,000 times 0.5%, or a cost of $5 per year. So if the ETF returned exactly 0% in that year, you would notice your initial investment of $1,000 would reduce to $995. If the ETF returned 10% throughout the year, your net return would be 9.5. So you basically have to take the return of the ETF, net of the expense ratio, and that will give you your net return, or the return you're actually seeing within your brokerage account. So now there's another thing I want to discuss here, which is called tracking error, and it's another important component of ETF investing. Most people probably never have heard of this before or never gotten into it, but I wanted to tell you about it because this is kind of a more advanced video on ETFs, so it is worth covering. The tracking error is the standard deviation of the difference between the returns of the benchmark and ETF. Because an ETF is supposed to track an underlying asset, but it's not always perfectly aligned. So they do, change the allocations within these ETFs quite frequently, but they are trying to mimic or mirror an index as closely as possible, but it's not an exact, precise science. So the tracking error basically shows you how closely this ETF follows the underlying benchmark or index that they are following. So if you want to look into this yourself, there are two ways to calculate the tracking error of a fund. The first one is the simple difference, and this is pretty much the easiest one. You subtract the return of the ETF from the underlying benchmark, and that is going to be the tracking error. The other way is a little bit more complicated, the standard deviation of difference. But if you are curious, when you are studying ETFs, you could easily calculate that simple difference to look at the underlying tracking error of that particular fund. So when choosing an ETF to invest in, these are the general guidelines that you may choose to follow. Number one, determine the underlying asset that you want to track. Are you looking for broad market exposure, or are you looking to have exposure to a certain industry or commodity? Are you looking to invest in, a REIT? You have to figure out what is that underlying asset you want to track and mirror as closely as possible through an ETF. So once you have that knocked out, the next step would be to understand the expense ratio and other fees associated with that investment. So here's a few questions that you might want to ask yourself in this process. First of all, what is the expense ratio? Second of all, does your brokerage charge commissions? Are there any management fees? And what about any account minimums? After that, once you understand the underlying asset that you want to track, the expense ratio, and then any fees associated with your brokerage, number three, if you want to go deeper under the hood, that would be when you understand and calculate the tracking error of that ETF. So in doing this, you're going to be answering the following questions. Number one, how closely does the ETF mirror the benchmark? And second of all, what is driving the error? Is the error due to the expense ratio? Is it based on rebalancing? Different factors like that. And then step number four would be to choose a brokerage to invest with. And of course, if you did want to check out SoFi, they do have many people investing with them passively, and it is an option for investing in ETFs. And then step number five, after you open said brokerage account, that would be to search for the ETF that you found and execute a trade. Now, there's tons of different brokerage accounts out there, but I want to tell you more specifically about today's video sponsor, which is SoFi. SoFi lets you trade with no commissions. There is a $5 account minimum, and they offer fractional shares. So if you're interested in buying stocks that trade at hundreds, if not thousands per share, well, with SoFi, you're able to buy a fraction of a share. That way it is easier to gain exposure. You have access to ETFs, stocks, cryptocurrency, and IPOs via SoFi. When you open an account with SoFi Invest, you can win up to $1,000. So you may want to check that out as well using the sponsored link down below. It's not an affiliate link, guys, so I won't earn any commission. But if you do like SoFi and you want to check them out here, guys, I'm very appreciative of them sponsoring the video. So I would very much appreciate it if you use that sponsored link down below. But of course, no pressure whatsoever. In addition to that, if you're looking to learn more about investing, they also have SoFi Learn, where you can learn about different investing topics. There's nearly 2 million members and a 4.8 star rating in the App Store from over 88,000 reviews. So in addition to that, guys, you're also going to find more account offerings versus a typical brokerage, all under one name here and all in one app. So within SoFi and their full suite of products, they offer IRA accounts, which are very popular for ETF investors because it's typically a more longer term investment. So if you're looking to invest tax sheltered, they do have IRA accounts. They have active or automatic investing. They have a credit card with cryptocurrency rewards and 2% unlimited cash back. They have a cash management account with no transaction fees, early payday, and a $100 welcome bonus. They have student loan refinancing, personal loans, as well as credit score monitoring and budgeting. So if any of that sounds interesting to you, feel free to check out SoFi via the sponsored link below. So now we're going to jump into the SoFi brokerage account and do a quick demo of what this app has to offer. Okay, guys, so here we are inside of the SoFi app. I'm going to go ahead and give you a quick tour and show you basically what this app has to offer. So right up top here, you can see that I have my invest account, and if I click on that, this is where any investments that you have are going to be. So it breaks it up in between my individual stock investing as well as my cryptocurrency investing. We talked about IPO investing earlier. If you are interested in that, you could go to invest, click on go to IPO investing. And then if you want to be notified of future IPOs, you just click on that blue button right there that says notify me. It looks like right now they don't have any IPOs available, but if you click on notify me, they'll update you anytime that changes. So on the home tab, you can see your different accounts here, and you can see where the balance is and how it's growing over time. It also gives you performance of your different investments. Now, if you do link up, with the different spending cards and debit cards and link your accounts, you can also follow spending, look at spending by category, and this is all of the budgeting tools that SoFi offers. They also do free credit score monitoring if you are interested. You can track the value of your home, tag transactions, so many really crazy things you can do within this app. I'm actually excited to track my home value within the app. I have 2 properties now, so I'm probably going to add that in at a later date, just because that is helpful rather than going on my mortgage statements to be able to track that automatically. So beyond that here, they also show you the performance of any stocks that you've been keeping an eye on. They also show you here top movers. They're going to show you utilization of your credit cards if you in fact link those here. There's also the reward section here where you can claim any reward points that you earn and redeem them. They also have sweepstakes oftentimes going on, and there's even a leaderboard here if you want to create a social account and track your performance compared to other people on the app. You'll also find, news section here. And I honestly really find that this reminds me a lot of, a news feed on a social media app where you just scroll through here and find interesting things. On the money tab here, this is where you could open up an account for cash management here, or if you wanted to get a debit card with them to track spending. Here we have the credit card, and they also have the ability to earn cryptocurrency as a reward on your spending if that interests you. We already looked at the investing account here, and then if you want, they also have loans within the app if you want to look at personal loan, student loan refinance, or even purchasing a home. Everything right here within this app. Anyways, guys, that's going to wrap up this video. I hope you enjoyed it. Once again, thank you to SoFi for sponsoring this video. If you guys decide that you want to check out SoFi after watching this video and doing your own research, feel free to use that sponsored link down below. SoFi did sponsor the video. It allows me to provide content like this to you. So your use of that link is always appreciated, but of course, never expected. If this is your first time seeing me here, guys, make sure you subscribe and hit that bell for future notifications. If you enjoyed the video, drop a like. If you have any questions, leave a comment and I'll do my best to answer. But thank you guys so much for tuning in, and I hope to see you in the next video.